Hey, good afternoon. It's 5:25 p.m. on Monday, the 29th of June. And I wanted to give you a quick update. It's been a while since I gave you an update on the markets. Um, been fairly flat, not a whole lot of changes, but up 5 basis points today on the markets, which is good. Treasuries are down 1 point. That's good, 1 basis point. So we're moving in the right direction. Great move upward after we hit the 50-day moving average. We've been kind of traveling along the 50-day moving average for quite a while. Poke above it, drop back down. Here we are. We penetrated the 50-day moving average back on June 18th, and we've been on a steady climb since. I think we're headed towards this retracement ceiling, 104.29. We're at 104.19 right now. But looking at the technicals here on the stochastic chart, looks like we're going to have a negative crossover when this black line crosses over on the other side of the red line. We get around down in this area here. It's usually an indication of a reversal. So if we look back, just kind of give you where we were again and where we are. This was the time leading up to the all-time, matching the all-time low of 3.25% on the conforming market right here. And basically, these are big movements. These big green lines, big green squares here, they're called candlesticks, are big moves. Look at what we were doing here in this area here. Just thousands and thousands equivalent to the Dow change in a day. These are 300-point swings here on the bond market, the mortgage-backed securities. That's unbelievably volatile. After we did hit that all-time low, matched it, the stock market plummeted, went from 29,000 down to about 19,000, bounced around. The Federal Reserve got involved, and ever since the Federal Reserve got involved, they're buying about $4 billion a day of mortgage-backed securities back in this area here. They were buying about 50 billion a day, $250 billion in 1 week. But since then, they've kind of steadied out their borrowing 25 billion, 10 billion. Now they're down to 4 billion. So it's kind of keeping the market steady. Other than this little upturn we've had here, I do expect that to probably change a little bit. But we are seeing lenders shedding the volume off of this point here. We had $3 trillion come into the market. Last year we were at 2.1 or 2.2 trillion, I believe, was an all-time record for a year of mortgage transactions. Just in this window here, we did 3 trillion. So we spent a lot of time shedding off volume. That's occurred. Just locked a VA loan today at 2.875 with no points and no origination fee. Crazy, crazy, crazy days. I do expect us to kind of move in a sideways moving market for an extended period of time here. We will have our daily ups and downs, but for right now, I think we're pretty steady. I have locked in a couple loans today because I do believe we're going to have a little give back here. Not much, but a little give back. We're still way a long ways away from 3.25. So we are, if everything was okay today, COVID went away, full employment, everything was back to normal, we'd probably be at about 3%, 3.25% right now. We are getting down to 3.25 at some lenders right now on conventional loans. So if you have any questions about buying a home or refinancing, now might be an appropriate time to give me a ring. Bill Burnett, 703-352-3295 is office. You can always reach me on my cell, 703-598-4198. Thanks. Hope you're having a great day. Any questions, give me a holler.